Hello and welcome to another update video on FET. Here on the Fetch.AI chart, the price has, shown a bit of a reaction here to one of the relevant Fibonacci retracement levels, which are relevant for a B-wave rally. So you can see it here, the 78.6 retracement got triggered. That's exactly where you would normally expect a reaction in a B-wave. That's our yellow scenario. However, I still want to give the bulls the chance, basically the benefit of the doubt, because the move to the downside is in 3 waves so far. So it can be considered a corrective pullback in maybe a larger uptrend. I am tracking here the move to the upside still as potential C-wave rally, which could be a 5-wave move. But it's not impulsive. I think we are beyond that now, okay? So it's not an impulse, which is a shame, but it is what it is. So it seems like the market wants to move up in a diagonal pattern. And let's talk about what that means, yeah? In a diagonal structure, it means we're dealing with a 5-wave move up. That would be 5 waves up from the 22nd of June low. But the movements are characterized by corrective price structures. So we're getting 3-wave movements in the subwaves, which means, for example, this 3rd wave here would be an ABC structure. The 4th wave anyway, and then the 5th wave would also be an ABC structure. We should still get to $1.55 as long as the June low stays intact. But there is much more work needed to actually, drive the price really higher for the bulls to really take a lead here. This is still at the moment just a range, and we have not yet broken out of the range to the upside. It takes a break above $1 to really confirm we're on our way to $1.55. It looked promising, and it can still happen, but we need to hold certain support levels. So let's take a look at the shorter time frame. So something that I communicated yesterday already in our member area is that the move to the upside here from the 22nd of June low is likely not anymore an impulse. It looked a bit like an impulse, but based on what I can see, I treat it as a diagonal structure, which means we're dealing with 3 waves up in wave 1. Okay, that's, I think, clear. 3 waves up in wave 3. So this here would be the A wave. We're now in a B wave pullback. And then from here, I'm going to watch for another rally in wave C. Now, the problem is that we haven't got any confirmed low yet, and we're already deep in support. So to keep this scenario alive, that we're now in a B wave pullback, we need to see a reaction before the price breaks below the invalidation line. That is located here at 64.5 cents. That's the invalidation point, okay, the red line there. Important also to understand that what we need to see really is a 5-wave move up now and a break above this internal swing high there at around 82.6 cents. So that would be an early indication that a low is in, because I can track this as an ABC in wave B. And honestly, this correction could be over soon. But already, I told you what the invalidation line is. Already a break below 69 cents would shift probabilities towards the yellow scenario, in which this whole rally was just a corrective rally, and we're now coming down and are going to test the support zone once more. At least that's a potential still, right? But for now, you could say it's the 69 cent level where probabilities shift from the white scenario, which is directly bullish, to the yellow scenario, which could still be bullish, but is short-term bearish. Okay, that's the update on FET. I hope you liked the update. If you did, please hit the like button, leave a comment, and subscribe. And if you really like the content, then please check out the channel membership. Thank you very much. Bye-bye.